Good day everyone, and welcome to the premium video newsletter for July 9th, 2013. Before we begin, let me tell you the earnings release dates for the two positions that we're holding. Pfizer PFE comes out July 30th, and POR has earnings coming out on the 7th of August. So we still have a bit more time to go before having to worry about the earnings for these two stocks. I generally don't like to hold stocks during earnings, so the fact that we have some time to go gives us a little buffer zone, and hopefully we'll be out of these stocks before the earnings is released. Looking at the stock market, the Russell 2000 is once again breaking out to new highs. This is a new high for this index, so there's no overhead resistance, no selling pressure. The Russell 2000 provides a very broad representation of small cap stocks. Keep that in mind. One important point you want to consider is most mutual funds that buy large chunks of shares and the ones that are responsible for causing sustained moves tend to favor large cap stocks because they provide the liquidity necessary for the large buyers. Also, mutual funds don't like to increase unnecessary risk, so focusing on the large cap stocks provides better assurances that the stock is a solid company. So the rally in the Russell is comprised of smaller funds and individual investors for the most part. These small investors will not be affected as much by the Fed bond buying as much as large institutions that make up the larger indexes. This is one of the reasons why the Russell is leading and the S&P is following, because of the different impact the Fed's curtailing the bond buying program will have on the different companies that make up each index. The S&P 500 came close to hitting the next resistance level of 1655, but backed off once again. I'm anticipating a pullback in this market as we had 4 up closing days in a row. The rally is not caused by heavy volume, and many stocks are losing steam today. The individual earnings are driving the market right now, so a lot of momentum we see in the next few days will be driven by large, well-capitalized individual companies that make up a large percentage of the index, so expect volatility this week. The gold market continued moving higher as anticipated. Much of the trading is purely technical, and the market is consolidating before another round to the downside. I'm very hopeful that the gold market gains some momentum to the upside, at least to the 1300 level, where I'm planning on initiating shorts in this market. We're moving in the right direction, so let's keep an eye on this market and see what happens. The crude oil market is continuing to move higher after breaking out of the resistance area late last week. The major catalyst for the breakout was caused by turmoil in Egypt and their control of the canal that distributes oil to different parts of the world. I believe the market will consolidate from these levels, but may end up going higher because the previous consolidation period lasted a very long time, and there could be unforeseeable events arising from the situation in Egypt. I would be cautious going against the trend at this time. Another breakout to the downside that just occurred is the British pound. I anticipate some consolidation around the 1.483 level, but we went right through it. I don't think this market is ready for a breakdown below the current levels because there's no momentum or volatility behind this move. I would wait to see a bar or two trade completely below the support area before seriously considering initiating a short position. So be cautious taking shorts in this market right now. I believe we'll have a pullback from this level very shortly, and I'll keep you posted on that as well. We had 2 setups, but neither of them were triggered today, and both orders were canceled. The energy sector is on a downslide right now, but the stock market rally caused the energy stocks that we picked to rally and avoid getting triggered. I don't like triggers that occur too late in the day and prefer early triggers, so I tend to cancel a majority of the setups if they're not hit by lunchtime New York time. That's Eastern time zone, folks. For tomorrow, we have an inside day setup on MPC, which is the ticker symbol for Marathon Petroleum Corporation. Remember, the inside day is our lowest risk trade and is similar to a mini triangle pattern. Place a sell stop as your entry at the 69.30 level, and if filled, place a protective buy stop at the 70.70 level. If the trade is not triggered before lunchtime New York time or Eastern time tomorrow, I'll be canceling the order, and I will notify you to do the same in the morning update tomorrow. Tomorrow we have Bernanke speaking again, and the minutes from the FOMC meeting starting at around 2 p.m. Eastern time. So expect a quiet morning and a volatile afternoon session due to the anticipation from the meeting. However, he was fairly clear last time in terms of what he was looking for and its unemployment rates. So I'm not anticipating anything extraordinary to come from the Feds tomorrow. In short, expect a slow morning while investors wait to see what Bernanke has to say, and then expect volatility to come through in the second part of the day. Have a great night, everyone, and I'll talk to you tomorrow for our early morning update.